Good evening, everyone. This is Richard Faulkner for Forex Investments. This is the weekly review for the 1st of May for the upcoming week. We're just going to dive straight in because we've got quite a lot to cover. So let's crack on with the USD JPY. So you're now looking at the monthly chart and you see we're coming down to the 78.6 fib. Now this is actually one of my favorite fibs. However, just because it's a fib or a line in the sand or a level doesn't mean you trade it. Basically, 98% of every single trader can see this fib on this chart. 98% or 97% of people who trade this fib straight away are going to be your retail traders, and that leaves you with a remaining 3%, 2% of which can move the market, and the 1% which are professional traders. The reason you don't trade this level just because it's a 78.6 fib is because they're going to stop hunt. Basically, what they're going to do is they're going to set up base camp. They're then going to start searching the market for stops, for the retail traders' stops. They're going to start filling the books, and then they're going to look to move the market off the level if they want to move it off this particular level. You can see that we've had a fairly strong down couple of months. And if you are just buying these levels just because it's a fib, eventually you're just going to dwindle your account away. So I'm just going to explain what I mean by setting up base camp and what to look for with respect to where to trade. Okay, so I mean, if you see here, I mean, a base camp, what I define as base camp is usually a double bottom. Okay, so basically what they need to do is they need to start buying into the market. And the reason they need to start buying into the market is because if they put all their orders into the market in one specific go, the market's just going to take off without them filling the book. So in effect, you can see here, obviously you've got a base camp, you've got a double bottom here. Buying comes into market. Remember, this is a day chart, so we get a couple of days of rise, we get a retracement, then we get a couple more days of rise. This here is a massive clue that the market's going to reverse. So what are they going to do? They're going to take one last stop hunt below the market, and then we get 1, 2, 3, 4, 5, 6, 7 days of straight continuous rise. That's a great trade. That's a stop hunt trade. You can get a very, very tight stop hunt here, providing you see your entry requirements, and then you can get 7 days of trade for 260 pips, which isn't bad on the USD JPY. What you can then see happens is the market doesn't actually break this high. You see the selling comes back into the market. Now this here is in effect base camp, call it base camp 1. From this position here, they've already built positions to get long into the market. They're going to go and do the stop hunts. So the market then rolls over, stop hunts, forms another base camp down here, and then really sort of takes off with this big buying bar here. So what does a double bottom do? Well, a double bottom produces stops, because anyone who buys this double bottom here, it puts their stop below here. And this is all excellent. This is all excellent evidence that this 78.6 fib level is going to be a good level. However, don't just buy the level. What we want to see is a reaction coming out of this 78.6% fib. And we're going to want to see the fib broken, move to the downside. Again, another similar base camp setup. Stops created, stops taken, and then a move up. And if we do get that, we could be looking at quite a significant move. Things to bear in mind is obviously they're expecting stimulus out of the Japanese government. That didn't come along, and these are all factors to consider when taking a trade. However, this is what we are going to be focusing on next week. So, like I say, what we want to see is we want to see this level taken. If we do just pop out to the monthly, we've got, in fact, let's go down to the weekly. You see here, we will have stops residing below this level here. So we could well see a little pop down to here, which is again bearing in mind this is a weekly chart, it's 113 pips away. Now we use a 10 pip stop, so that's no good to us. So in effect, going back to this this ratio, 97% of traders buying the level, 1% waiting, and the big money, the smart money, the 2%, they're going to make the decision for you. They're going to show you what's going to happen. So why buy now when they've not even entered into the market? If they don't appear in the market, then this 78.6 bib level is not going to hold. And yes, you know, you can see buying here, buying here, buying here. I mean, even buying here on the way down. However, they have big pockets and they can buy all the way down to 100, which is where this level is here. And there are obviously massive stops below here. So it depends how tempting those stops are and whether they make a decision to go and get that down there. So let's wait and see. Let's see what reaction happens. If the big money starts buying, then you want to be jumping down onto the smaller time frames and looking for the stops. Wait for the stop hunts and look to buy. Now I'm going to show you an example of this. And euro pound last week was Thursday, Friday, absolutely perfect. So let's have a look. 78.6% fib. We go through the fib, stop hunt. Let's go down to the low time frames and see if we can find a base camp. Here's your base camp above the 78.6. Where's everyone going to put the stops? Just below the 78.6. Stops taken. Trend line broken. Big trend line there. Reversal. Now, if you see the trend line's broken here, and this is obviously going to scare a lot of people out of the market. But if we just scoot out a little bit here, you see there's another trend line there, and that obviously that was a rejection of that trend line there. However, this inner trend line had been broken, and you can see we're retesting the backside of this trend line. But if we jump down onto the 5-minute charts, and these were the trades here that we took. There were levels of stops that, you know, there's obviously stops were taken here. Market moved off. This was big buying in the market. This is the big boys buying the market. This isn't retail traders buying the market. This is big boys buying the market. And you can see the reaction they had on the market. They're then going to bring it back down, take the stops again, and this is where we got into the market. So I think we had what's that trade there? No idea what that was. But anyway, so obviously 3 positions on. One stops out break even. The others were placed below here. So that was a 6 pip stop, and then we went on to make 37 pips on that move with a 5 pip stop. 42 pips on that with a 5 pip stop. We then came down, grabbed some more stops. We then did a quick 14 pip move with a 10 pip stop. Market then rolled over, came down, grabbed some more stops. And if you look at this chart here, I'm only ever trading in one direction, and we're only ever trading long. You never want to be trading short coming off these levels, especially if you've got this here. This is your base count. This is your key point. Why you don't want to be trading against this. This is telling you the market's going long. Just do not take the market short when you see this. It's account suicide. So long, 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 and then finally on Friday we had the big one, which was a decent trade. They came down, grabbed some more stops. We had below the low, we had a 7 pip stop on this. We took our first position off at 24 pips. The reason being is you've obviously got stop hunt above this level here, and we let the rest run for 37 pips. And then obviously we've come into another trend line on the 1 hour, and we've broken through that, and we've actually just gapped higher. To be honest with you, it actually looks like we have taken stops above this level here. Let's just have a look at this. There's your bigger trend line. So taking stops above this level here. Whether we get a retracement or not now is unknown. So again, I'm not going to trade against this formation low here. We're going to always look to be trading lower. And if you look at this on the monthly time frame, sorry, the weekly, daily, get there in the end. Daily time frame. We're going to look to take this up to here. So it's about 382 pips. So we look to entering the market tomorrow on any retracements, and your position for this could be somewhere below here or somewhere below here. So you see what entries you get, see what comes up in the market. Make your decision based on that. I haven't got time to go into entries. You'll have to do the course for that. If you are interested in 10 pip stocks, by all means, just drop us a line. Okay, so that's basically what we're looking at. So that was our trading on the euro pound, but obviously we're looking for the same sort of action on USD JPY, possibly down to just below 105.26. The 78.6 fib is 106.27. And we're going to be looking for a fairly significant move on this, providing we get entry criteria and rejections coming out of the market. So that's USD JPY. That's some examples shown on euro pound. I don't think I've shown you the euro NZD. I'll show you this. This is another example of base camp being set up and the trade being taken. So this is the daily time frame. You got stops below here. Stops are taken, 78.6 fib. Jump down to the 1 hour charts. Look for base camp. And this is a big one. So here is your base camp above the 78.6 fib. And the reason this is a big one is you can see here, look at this buying here. Huge amounts of buying. More buying, more buying. Stop hunt, 78.6 fib, double bottom. This was our entry. That was our first trade, 124 pips. Second trade, 37 pips. I got stopped out by 2 pips on this one before it went and ran for, I think, something like 500 pips. But yeah, that was incredibly annoying, but I mean, that's just part of trading, unfortunately. 291, there was the move. So 403 pips. And again, you can see here, this here is your base camp, and again you've got a second base camp here. No trading against your base camp. You're not taking this short, you're always taking this long. So look for that 78.6 fib. Look for that tomorrow on USD JPY. It may take a couple of days, bearing in mind it's bank holiday. So those are just a couple of examples. So finally, what we're looking at here on the USD CAD is same sort of scenario. So we've got, this is the weekly chart. We're coming down into 78.6 fib on the weekly. Let's nip down to the daily. It's been, I mean, it's been fairly well hammered. There is an article on Facebook I posted, actually. I'll just show you here that they are, there's a possibility that oil could be returning to $30 a barrel. Whether this happens or not is a different story, but USD CAD is intrinsically linked to the value of oil. Oil's up at, WTI is up at 48, coming into the 50, which we expect to see a bit of resistance coming into the 50. Whether it goes down to 30 is another story, but this just supports supports the fact that we're actually going to see a bit of a retracement in USD CAD hopefully this week. The article's there. It's on our Facebook page. Facebook page is Forex Investment. Go and have a look. Have a read. It's only short. It's not long, and hopefully it'll give you a bit of fundamental analysis to work off coming into next week. So quickly back to the charts. 78.6 fib. Let's have a look for base camp. Well, what have we got here? These patterns are produced to manipulate traders. Where does everyone put their stops? Right below the head and shoulders. So there'll be people buying this on the left shoulder. They'll have a 50 pip stop. Goes down. Take the stops and look at the reaction you get there. That is the big boys taking the stops and filling their orders. And there you go. That's a prime example. 68 pip move in 1 hour, and then quickly rejected. We then go down, stop hunt below the 78.6 fib, and now we're just forming out above the 78.6 fib. I don't have an entry on this at the moment, so we're just going to wait, and it's going to be the US session tomorrow. I want to try and find some stops, and I can't actually find any. I'm going to need to see a bit more evidence of where stops are being placed before we actually gain an entry into this market. But what you can see here is a rejection. So there's a nice rejection coming out of the 78.6 fib. This is what you're looking for. And can we see a trend line? Yeah, not great. But you can see a trend line, and obviously we're coming down and touching the reverse side of this trend line. I'm going to want to see a bit more evidence to see a few more stops built, and then obviously look to take a position in the US session tomorrow. So that's USD CAD. Let's have a look at something else. Pound Swiss. This is what we're going to be looking at because we're expecting Euro Pound long tomorrow. We're looking at Pound Swiss. It's gap down. So we get the gap fill overnight, and you're looking at your stops being somewhere over here, above this level here. So you can see obviously we've had quite a nice move down. We've got a trend line forming here. Come up and tag this level would be a doubt it's looking unlikely whether we actually get back up to this level now. But that's where we're going to be looking to trade. So just to recap, USD JPY, this is what we're looking at for tomorrow. We're going to want to see a reaction of the 78.6, possibly a dip down to the 104. Sorry, not 104. 105.20 level. See a reaction, come back above, and look to trade this higher next week. Euro pound, we're looking higher on the euro pound for next week, up to the 38.2% fib. We're then looking for a retracement. Let's just go through this actually. You're always going to get a reaction of the 38.2 fib. So we're going to look to trade this higher up to this 38.2 fib. Doesn't mean we're going to take it short, but we are going to take it up to this 38.2 fib. So 78.76. Then going to look for a retracement and then look to buy it and move up. And that's going to be our trade for next week on the euro pound. Euro NZD, we're looking for this gap fill continuation. We're actually expecting this to go a lot higher. So we're looking somewhere, the stops up here. So we've got a fairly big move on this. 500 odd pips. Euro NZD. Pound Swiss, continuation short. So this is our stop hunt. Whether we get it or not, it's a different story. That is 4069, 4079. Somewhere in there. and USD CAD setting up fairly nicely. Stop somewhere in this level here. Nothing crystal clear. Wait for the US session tomorrow. Okay, best of luck. And if you do find any of this helpful, mark those levels down on your charts. Come and look at us on Facebook. Like us on Facebook. We'll put it all on Facebook, and enjoy your trading. Okay, thank you very much.